Mr. MS Unnikrishnan. He's the former MD and CEO of Thermax and an industry veteran, joining in to discuss the outlook for the space. Thanks so much for taking time out. And I think our curiosity in the sector is only further deepening because of the fact that the parent company of ABB India, ABB Global, declared their results, and there's been a decline in the order inflows quite significantly. 2 out of 4 of their businesses recorded a single-digit growth this time around, and even their order intake in some of the regions like Middle East and Asia have declined. Is there a worry of this being a telling sign of the entire capital goods industry, Mr. Unnikrishnan?
I think market is overreacting to that trend because most of the European-based capital goods companies, which ABB is one of them, maybe Siemens to a certain extent, may have a minor reduction, not a substantial reduction in order intake. In fact, they had a minor growth in order intake only. But if you look at the details of their report also, both in India and some other parts of Asia, they've had excellent growth available. They had substantial drop in China. So I would say that the companies which are dependent upon domestic industry, the capital goods industry, are all in very, very good shape. In fact, all of them are plumb with orders. They'll find it difficult to execute most of them in the current year. Some of them will get spilled over to the next year. And the outlook based on the new capacities getting created within the country is very bullish, I would say, at this point of time for the Indian-oriented capital goods industry. And there are some of them which are Indian companies like Thermax, which also export outside India also, which comprises, may not be substantial, but between maybe a 20 to 30% of their top line do come from outside India. And those are dependent upon China in that export. They may find it a bit difficult. But otherwise, I would say Saudi Arabia, many of the Indian companies do export to Middle East, and there things are okay. Southeast Asia is quite okay. So there, I may not expect a growth like what is happening in India, but overall for them also, it is going to be very good. Then comes the multinationals, MNCs who are operating also in India. But the Indian operations are not very substantial for them. For example, if you were to look at ABB in a quarter, their revenues are around $8.8 billion globally. Indian revenues could be in between 1 to 2 billion. I mean, a quarter will be less than $1 billion, much lower than that. So their Indian portion is much lower. So even they will escape. I don't think the market need to be unduly worried about one quarterly report of one company, that to a Europe-based company.
I like to then talk about the domestic factors here. And there is a big election cycle at play. In your experience, historically, when we go close to a central election cycle, could there be delay in decision making? Do you think long projects which are about to be signed up, they get pushed back, the files don't move forward? Do you think that in a sense could be a real risk? It may not appear today, it may not appear next quarter, but let's say starting from next calendar year, it will appear?
To a certain extent, especially for the government projects, the PSU-oriented orders and also the government contracts related to that may have a slowdown, may not. I would say that it will have a slowdown. The focus will shift a lot more, and many of them may want to wait and watch for the election results to be coming in. But that will be only, I would say, contracting companies, not the real EPC companies. The larger engineering companies of India depend a lot more on private capital, both in India and outside India. So they will not unduly get worried about. And over and above that, irrespective of government, whichever is the government, the capital goods industry depends upon the capacity utilization of their customers. And luckily for Indian companies now, most of the, including commodity industries, are hovering between a 65 to 75% capacity utilization. It's a reordering level. So many of them have placed orders, many more are going to be placing. And normal time that is going to be taken up. For example, if you're going to set up a steel plant, it is 4 years from the day when you have the first order concluded. If it's even a solar power plant, it's not less than maybe a 24-month period, because that's something which is growing very fast in the country. Heavy chemical industry would take 3 to 4 year period of time. A cement plant will take 3 years. So you cannot be postponing such decisions if you're already at a capacity utilization. For example, it's even at 75%. He has to place an order. In case if it doesn't do, he will lose the market share 3 years down the line. So exactly as you mentioned, Nipun, it is going to be, they are not going to be unduly worried about it. However, those who are in the road contracting, EPC orientation, where they depend a lot more on the government agencies, and even PSUs. I would say that there could be some kind of a concern, but that also, I don't think it's such a bad situation in the country right now. Political uncertainty is not prevailing. I don't want to comment on the current situation, but I think there won't be an uncertainty in the country at all going forward related to that either.
Okay. If you have to, let's say, tick mark 3 categories where you think the growth for next 2 or 3 years within the capital goods space would be substantial, which are those 3 categories?
First and foremost will be the renewable energy sector, both wind, solar, and offshore wind, which is going to be starting. 3 of them will be the number one. Second will be related to setting up capacity in API-related chemical industry, chemical pharma industry, the plant making for that, equipment making related to that process plant. I would say, let's say entire process plant industry, chemical, pharma, in large to big size. That's the second largest one going to be coming in. Third is going to be food processing industry. There is an explosive growth going on and going to be anticipated. They may not be thousands of crores of investment, but this will be hundreds of companies coming in with investments of maybe between 100 to maybe 500, 600 crore. And it is going to be across the country, not limited to one area alone. Because these are the 3 critical areas I would talk about.
Okay, what about the outlook in terms of deal finalization orders, Mr. Unnikrishnan? Is there a worry that due to the election year that we're heading into, we could see a delay?
I don't think so. Because in any case, predominant part of the orders that happened in the recent past have in private industry. May it be cement, as I mentioned about the solar related, but there's not a single public sector order. Everything is in the private sector only. And second is, I spoke about chemical industry, not one which is government oriented. All of them are very clear about Indian industry is going to be continuously growing for a fairly long period of time. Unless there is some total political upheaval which is going to happen in our country or globally, I don't think capital goods industry should unduly worry about it. Quarter over quarter, don't look at it beyond the level for capital goods industry, because in a quarter they can have a reduction, next quarter it may be made up also. Irrespective of the election results, whatever could be that, this industry will continue to be growing in the coming years.
So do you see this more like a 3 to 5 year phenomenon, or it's not going to be a 3 to 5 phenomenon? It will be sugar rush for next 12 to 18 months.
I would say 3 years I would give a run. Then there will certainly be, because the capacities are bulk in nature. For example, when you set up a new capacity for a steel plant, nobody would set it up less than maybe 3 million tons per annum. For that plant to be reaching a capacity utilization level of maybe 60%, 70%, one should anticipate maybe 3 to 4 year period of time. So there is a maturity after the 3 years. So many industries will set up a capacity, then wait for that to reach to a reorder level. So I would say, depending upon which segment are we talking about, between 2 years to 3 years is going to be a good run. Thereafterwards, there could be a little slowdown. And then depending upon how things are going to be panning out for India, if we cross a 5 trillion size by the time, and then we are making a plan for the 5 to 10 trillion, certainly there will be capacity addition happening. Remember, capital goods industry depends upon capacity installation, capacity building in the country. And currently, nobody is talking about capacity is not needed in the country. On the contrary, everybody today talks about, even say G20, the finance ministers who came over here, the people who do matter, what did they talk about? That India has got a chance of China +1, which is a story that all of us used to talk about for the past maybe 5 years. But globally, everybody started talking about it. And we can see that the Chinese economy is shrinking, which they may not be publicly talking about. It's known to all of us that there is a major concern over there. And many of them will want to have the new capacities not set up in China anymore. Even if there is a demand, even if the economy of developed world were to be picking back, they're not going to go back to China. Yeah, India will have a major share of that coming over. Okay. Of course, there will be Vietnam, there will be Thailand, there will be some of the Southeast Asian countries will get benefited partially. But the main beneficiary for this is going to be India. Absolutely. Very clear about that.
Unnikrishnan, appreciate your time. So glad you could join us.